Today, imagine a major breaking news headline. The United States and Iran have officially agreed to stop the war. After weeks of tension, attacks, and fear in global markets, peace is finally announced. Now the big question is, what happens next? Especially in financial markets, and more importantly, in forex trading. Let's break it down in simple terms. First, the immediate reaction in the market would be relief. During war, investors become afraid and move their money into safe assets like the US dollar and gold. But when peace comes, that fear starts to disappear. This creates what traders call a risk-on environment. That means investors are now willing to take more risk. As a result, stock markets usually go up, investor confidence increases, and money starts moving back into growth assets. Now let's talk about the US dollar. During conflict, the US dollar becomes strong because it is seen as a safe haven. But when the war ends, demand for safety goes down. This means the US dollar can start to weaken. So in forex trading, currency pairs like Euro versus US dollar and British pound versus US dollar may move higher. This creates strong buying opportunities for traders. Next, one of the biggest factors is oil prices. During the US and Iran conflict, oil prices usually rise because of supply fears, especially in the Middle East. But when peace is announced, those fears go away. As a result, oil prices can drop quickly. This has a direct impact on forex markets. Currencies like the Canadian dollar, which depend heavily on oil exports, may weaken. At the same time, countries that import oil, like Japan and many European nations, may benefit. This creates new trading setups in the forex market. Now let's talk about volatility. War creates uncertainty, and uncertainty creates high volatility. Markets move fast and unpredictably. But when a ceasefire happens, volatility usually decreases. This is actually good for many traders because the market becomes more stable. Trends become clearer, and technical analysis works better. Next, we have risk currencies. Currencies like the Australian dollar and New Zealand dollar are known as risk currencies. They perform well when the global economy is stable and growing. During war, these currencies often fall. But when peace returns, they can rise strongly. This is because investors start moving money back into growth-focused economies. Another important factor is central banks. During war, rising oil prices can increase inflation. This makes central banks more cautious. But when the war ends and oil prices fall, inflation pressure may decrease. This allows central banks to consider lowering interest rates or changing their policies. And interest rates are one of the biggest drivers in forex trading. Lower interest rates usually weaken a currency, while higher rates strengthen it. So traders need to watch central bank decisions very carefully after a ceasefire. Now let's look at the bigger picture. War disrupts global money flow. Investors pull money out of risky markets and move into safe assets. But when peace returns, capital flows start to rebalance. Money moves back into emerging markets. Global trade expectations improve, and financial stability increases. This creates long-term opportunities in forex trading. It's also important to understand that market reactions happen in two phases. In the short term, right after the news, markets can move very fast. The US dollar may drop quickly. Stock markets may rise sharply. Oil prices may fall fast. But in the long term, things become more stable. Economic data, interest rates, and global growth become the main drivers again. For traders, both phases are important. Now let's talk about some key forex pairs to watch. Euro versus US dollar may go up. British pound versus US dollar may also rise. Australian dollar versus US dollar could show strong bullish movement. And US dollar versus Canadian dollar may fall if oil prices drop. These are some of the most important opportunities after a ceasefire. However, there are always risks. Even if peace is announced, the situation can change quickly. Political tensions can return, or agreements may fail. Sometimes markets move based on expectations before the actual event happens. This can cause sudden reversals. That's why risk management is very important. Always use stop loss. Always manage your trade size. And never trade based on emotion. To sum it all up, if the US and Iran war ends, it can create a major shift in financial markets. The US dollar may weaken. Oil prices may fall. Risk currencies may rise. Volatility may decrease. And new trends may begin. For forex traders, this is not just news. This is opportunity. But the key to success is not reacting late. It is understanding the bigger picture early.